Greetings, Jedi traders. David here of TradingFibs.com to bring you state of the market, indices, and crude for the week ending July. Not there yet. January 15th, 2016, going into the week of January 18th, 2016. As always, please seek financial advisement when trading with your money, as these videos are for educational purposes only to support your knowledge in the market. See what's going through my head on any given day. Always make sure you have a solid trading plan and always manage your stop when placing a trade. Well, welcome to 2016 part 2. As market action chopping at the bottoms from last week's price action, continuing lower this week, closing out additional gaps and lows of 2015. We'll take a look at that here in a little bit. Hey, with hopes of a rally on Tuesday, was clearly negated as the market continued to move lower. Prompting me to respond to the article that I had written on seeitmarket.com. I'll go ahead and point that out at the end of my updated article. Obviously, closing downside gaps, downside levels, questioning what many might want to know is when do we move back upside? Clearly, I have no clue, but as technical signs begin to shift in that direction on a larger time frame, I soon too will begin to shift that way and upside open gaps. Till then, we still have some minor and unfinished business below. So let's get right into the market as we take a look at market profile all around. Let's start with the crude. As we know, the story of crude has been coming down. With the stories of Iran releasing crude into the market. Here we are. We could see crude closing out some daily gaps, taking care of each day daily business, and setting almost new lows here. Here on Friday. Unbelievable how far down crude's come from all those highs, 150 bucks. So you could say what a short or what an opportunity that we'll have back to the upside eventually. But crude for now, leaving some major open gaps up above with daily gaps shown here on the turquoise lines, means eventually, yeah, crude will come up, and when we start turning upside, we'll take a look at that on the bigger time frame. Until then, I have no lines below, no unfinished business below, so crude, as it continues to move lower, as long as we continue to take out these daily gaps, every time we take out a daily gap, simply cross that out to a dash line. As you can see, we have no dash lines except a new open gap here at 29.70 from Friday. Jumping over to TF Russell, take it out, look to the upside. A lot of lines being formed to the upside, but that wonderful TF closing out once again. We closed out that long time open gap from last October, and as we continue to move downside, just taking care of each unfinished business below from each previous day. But again, Monday and Tuesday starting out the week, even a little bit of a rally, a lot of wild action there on Wednesday, and then eventually just bringing down price action the rest of the week. It really is the YM, the NQ, and the ES as we continue to move downside that really has a couple of lines down below. Again, we've seen week after week. Look at how much unfinished business above we have on the turquoise lines up here. But as YM comes downside, it's clear. It's clear sailing. There's nothing below that I haven't had on my charts for a while. And 15,726, we didn't come too far from closing that out. So perhaps next week we'll close that out. And this is where I get the sense of perhaps. Again, I use the word perhaps. Market may turn around. Not that will turn around on a dime at 726, as we want to take a look at major, maybe some of the indexes or the ETFs to see where would, the bigger picture again has been this whole rise from 2009 up until now, using just a simple Fibonacci support to see where would be the retrace. So for now, YM just taking care of business from each day, closing out yesterday at 15,911. The weekly opening price here at 16,330. So again, a lot of waffling there at the beginning of the week, a little bit of a push up on Wednesday, and then obviously the rest of the week we came down and closed out here at 15,911. It's probably the NQ. Look at that. The NQ actually almost, I almost had that marked off, 40.74.75, but it just missed it by a tick or two, the low of the day. But there it was, Monday, Tuesday, Wednesday, really getting that lift, and then just dropping down, and a lot of that became a weak profile at the bottom, and we'll take a look here on volume profile. But again, Thursday trying to get back some of that price action, and Friday finishing out downside. Friday, pretty wild day on the market. 40.74, 75, and then for the TF, I'm sorry, for the NQ here, it really is 40.31.25, 39.97.50, and that's it for the NQ. We've these were all lines that we were seeing months ago. You can go back to my old videos. You'll see price action all the way up at the highs, and all these lines below. And you could have called me a nut for saying, no way, we're not coming back down, but here we are. And market takes care of unfinished business below. So let's roll right into the ES. The ES, there it was. 1874.75. We could see all the lines up above. And again, you can look at me and say, no way, we're going back upside. This whole thing, the market's falling and the sky is falling. The truth is, eventually we'll make it back to the upside and close those upside lines. Hopefully take care of business as we move along. But markets rally, they come back, recessions happen. It's not for me to claim what we're in right now. Purely on a technical intraday day trader, we're just taking care of key technical levels, and as the market does that, that's good for me. That's good enough for me. And so here the ES, you can see 2 days to the side, Wednesday and Thursday like the rest of the market, and then Friday finishing out down here around that 1874.75. That was the last line. That's it. It'd be pretty good if we can come down here, close out that open POC on Monday, or on Tuesday. Again, Monday is a U.S. holiday with some limited trading, but again, we can close out former points of control. More power to us that says price action might continue the upside. Now, I want to jump over for a moment here to the SPY, as we could see, as I just mentioned here about Fibonacci retracement. If you just take a look, this was around the lows here in 2009 as the market had obviously came down all the way and retraced down. And then simply drawing a Fibonacci retracement from the low to the high of the market, as we have here, 213.78. You got to ask yourself, how by what technical standards do you look for a comeback? Where do you think things might turn around? Well, I use the moving average crossovers on T3s. I use a combination of Fibonacci lines, and that will start to show a significant strength back to the upside. But for now, as we come down, we could see that price action has been coming down now and finding support off that 200-day moving average. Again, this is a weekly chart, 200-day back here in August, and then bouncing back down in September. And here we are once again back in January, second week of January, and again finding support, that 200-day moving average. So institutional support here. You could draw your trend lines, etc., etc. But significantly, the bias is still upside. This has been a bull market, not a bear market, a bull market since back there in 2000. Well, actually, I'll say the initiation of this move started back in 2009, but until probably here around 2012, that's really when things started lifting up to the upside. But here, we had the crossover back here, a little bit of a retrace, and then boom, it was all upside and just tapping that 5-period exponential moving average and continuing to move to the upside. So again, the purpose of showing you this is that we definitely, based on just Fibonacci retracements alone, you just take the bigger pull. You can use this on any of the indices, any stock for that matter, futures, and the Forex. When you're looking for a retracement, a typical retracement can be 50%. So, the SPY can come all the way down here to 140.44 if 50% is the retracement on this upside move. So definitely always room to the downside. But let's go ahead. Let's jump into the volume profile, and then we'll go over to long-term charts and see what this market might hold for us. All right, volume profile, again, similar picture as we saw across the lines on market profile. Again, my preference each week, as I mentioned to you, volume profile, to me, a much stronger profile of where price action was versus time. How many people traded at that certain level or that certain price, not based on time, but and again the orange respective of the 70%, the point of control where the majority of trading took place. Again, you could see here as downside here in the crude, again as we continue to move downside, taking care of business along the way. When I mean we take care of business, we close out the previous day point of control. When we have a weak value area low, again we tend to repair that by trading within that zone or in that value area. And we can see here Friday closing that area out from that weakness from the previous couple days. Volume profile on the TF, again, as I showed you on the market profile, again, not much to the downside, everything to the upside. So again, that's another positive sign. As long as we continue to take care of the former points of control, if we leave them open to the upside, that just tells me market eventually will rally up in an opportunity to get back in on the longs. Again, YM, look at that, right on Friday. Some great price action here during the week as we continue down. Again, no major points of control. Now, again, this is only representative 600 days. So if I were to go out a couple of years, I'm sure I'd have some lines down there. But again, we mentioned. Let me jump right back to market profile. Let me show you here on the YM. Look at that. There's that 726. That we were looking for on the daily gap, and when you match that up with the volume profile right there, almost to the T, almost taken care of. Look at those long-term open VPOCs. Now, if I were to go back here, I can't tell you when those are from, but from some significant time. So there it is, actually back from September. And actually one back from further back. Now, if we go to a long-term chart, you'll see that we're pretty much at the lows. That's right, we're pretty much at the lows of August, too. So there it is. There's that former point of control. Let me get that steady for you. There it is, the end of August. So point of control, and amazing, we tried to close that out back in September, but market ran up. And let me show you that. There it is. Market ran up, and we had a lot of consolidation over this area, and here we come back down, leaving open points of control upside. But look at that, great market action to come back down and close out the unfinished business. Again, 600 period major VPOC upside, 17634, which I think eventually we will return to. Volume profile on the NQ, same picture. 4264 was really the point of control for the week, as you can see. There it is, NQ, Monday, Tuesday, Wednesday, Thursday, and Friday, pretty much waffling around that 600-day major VPOC, 4264. But again, it's the NQ that's still, it's only the NQ really here. Go back to the market profile. As you can see, the NQ still has 3 lines downside. We almost closed that one out on Friday, 4074.75. I have a low daily gap of 3997.50. And if you come here to the volume profile down here, 3 levels down, 3800 all the way down to 3658. So we do still have some room to come down. Whether we get that now, whether we rally up, eventually come back down and close it, that's to be seen. All I can tell you right now is we continue to close out unfinished business below, and that's a good thing for the market. And wrapping up with the ES here on volume profile, again, nothing to the downside, as we can see price action here closing out around 1875.50. We closed out the last point of control on the chart, which if you go back to the market profile and you take a look at the ES, my last line in the sand here was 1874.75. So we close out the market profile there. We close out the volume profile down here, and good things for the market if we close out unfinished business below. But again, you have to remember, and again, I showed you on the chart here, the future in line with the SPY or the SPX. Again, we still can retrace. We can come down all the way, leave open gaps up above. We can leave open points of control that eventually will return upside. But at this point, we've pretty much closed out a lot of the unfinished business from these recent lows back from October of last year. This was in 2015. Actually, I'm sorry, this is 2014. If you remember that downside action back in 2014, where the market rallied back in November, we thought we'd have the same thing. Instead, we rallied this time. But here it was back in October. We came back down last August. We retapped that lows back in September, and we're right back to where we started. All right, let's jump into the long-term pictures, which I love to look at. Look at some Fibonacci lines. So here we are. Again, the question goes back to the article that I recently wrote. I'll go ahead and give you that link at the end, or show you the page where that's located. But again, when I'm looking for a turnaround in this market, the question is how many of my longer indicators are pointing upwards. And so I tend to look at maybe a higher time frame, like a 50 tick, or I'm looking at a 4-hour chart and on a T3 moving average and a 51.44, and you can clearly see all the way around here we're pretty much in a bearish bias. But again, if the 50 tick starts to turn in the green and the 4-hour chart starts to shift, then my technical bias obviously is going to move the larger time frames, like the daily, the weekly. Obviously will take a lot longer to get the monthly back in an uptrend like we've had for all these years. The 4-hour chart will shift back upside, 50 above 144. All this what this does is it doesn't tell me where trading will take place for the day. I can have green, green, green here, and all of a sudden price action just drops for the day. Well, eventually the candles here will drop too. So overnight action or previous day action is never an indicator of what's going to happen for the next day. But what this does is starts to shift. If this is shifting in the market to the upside, so an example here on the TF Russell, I got T3 moving average back up in the green, 534 crossover. I'm waiting for a 4-hour chart. All right. I know that my daily, my weekly, and my monthly are still to the downside. But again, what this does is supports the intraday trade. Now we know first of all, whether you're a long trader or a short trader, if you trade in both directions, you're always ready both ways. But what this does is if you see the green here on a higher time frame, and then you go to your intraday picture, right? Sometimes a lot choppier, obviously a bigger, smaller time frame. But what you do all of a sudden is you have that support where the moves to the upside. I'm not saying they're all going to move with, they're going to, you enter and all of a sudden it's going to run 100 ticks. Obviously you see here this didn't run all the way, but obviously earlier entries will always do nice. Here you see rejection at the VWAP, but all of the buy signals here, again, this was on Friday's price action. Again, a really nice move here towards the end of the session. All of these were being supported by the long-term TF right there, the 50-tick range chart. So always looking to the higher time frame to get where's the technical bias shifting. And as I can see here on the chart, my technical bias is shifting to the upside. And again, I have most likely a 50 above the 144 on a 1-minute chart. And now here my T3 moving averages are crossing over. And all of these are possible re-entry points or places to move your stop upside, excuse me. All right, so again, we're focusing here on the long-term picture. Again, the TF is still much in a bearish bias, but we're starting to change here our tune on the 50 tick. So 50 tick continues upside. The TF on a 4-hour chart might just do so. Remember what we said, the TF Russell here, no more lines to the downside, but again, you might want to go to your IWM, take a look and see, is the market still have room to come downside? Where's your Fibonacci retracements or any other technical indicator you might be using? Right now on a downside, we know that we closed out the open gap here from last October. We're leaving open gaps up above, but we do have a Fibonacci extension on the way down here as we're holding here at 161.8. A full Fibonacci extension would be down to 898.3, and then you're looking at obviously a possible Fibonacci retracement. But for now, right now, what we're doing is we're obviously exceeded already those lows from back in August and back in September, and even possibly coming down further towards previous lows from some of the previous years. All right, so there's our TF Russell. Let's jump right into the long-term YM. As we can see the shift in the market here on a 50-tick range chart. We're back in the green. 4-hour chart still bearish on a 4-hour. Again, these two are 4-hour charts. One is a T3 moving average. The other one is a 51.44. Two different technical indicators on there. But again, when these three charts swing to the long position, that's when I start having more of a technical bias that's shifting to the longs and possibly even running up and closing out some of those open daily gaps upside, which eventually, if the swing position here chart moves to the long, the intraday charts will obviously waffle each day as there's both shorts and longs positions being taken, but the weekly and the daily will start to shift as well. But right now, the overall bias is still bearish. But again, we would like to go to the Fibonacci chart. Here we are. Again, the Russell already cleaning out those lows, but here we are on the YM coming back to those August and those October lows. Again, that number 15,579 from here was the low back in September. 15,726 was that open gap that we still have, and we're coming up to some support here, or resistance to the downside. If we obviously break down there, here you can look to last August for the next support around here, around 15,000. All right, long-term NQ, again, very similar picture, except 534 hasn't crossed over. I think you get the bias here. Again, interesting here on the daily. We're still, actually, the technical bias is still upside. I like to call this bullish neutral as price action is under. But when this, until this goes red, this is still a bullish move on a daily. But weekly, definitely confirmed downside. The monthly still downside. The 4-hour chart downside. So the bearish pretty much in control. But again, looking for a turnaround. Watch the higher time frame. 4-hour chart, 75-tick chart here on the NQ. And again, we closed out that daily open gap from October back this last week, 42.51.75, closing it out. There it is, back in October. Again, all open gaps eventually get closed on the stock index futures. Do we have room to come down? Absolutely. Remember, go to the market profile, go to the NQ. We have 39.97.50 down here. Volume profile on the NQ downside, 36.85.50. 36.85.50, the lowest number there. And all you have to do is come down here, and yeah, we even have a little bit further down than these previous lows on the NQ. So again, nothing wrong with a pullback, guys. Nothing wrong with a pullback. No, we have open gaps to the upside, eventually gets closed. So again, when the market reaches some of these lows, we'll run that back upside, and we'll see our swing position charts shift to that direction, including eventually the longer term charts, and perhaps back into a bull market. All right, here we are on the ES. ES all in the red, all in the red. 100-tick range chart based on the volume, a higher time frame here. 100-tick range chart. ES still downside. 4-hour charts downside, the monthly downside. Again, I think you get the reading here as the finally the weekly on the ES closed out, volatility to the downside, all under the 5-period SMA. What's key here, again, check it out right there, 1853 from the low back in September. Again, back in August as well. Link that back up to the SPY chart that we were looking at. Do we have continued room to the downside? Absolutely. If we're going to continue down to former Fibonacci lines, but remember, the SPY is finding that support at the 200-period moving average. Perhaps you have a trend line there finding support, but right now, the futures ES finding that support at 1853. You go back to the market profile, you go back to the volume profile. We've closed out all the unfinished business, so perhaps the market rallies here. Markets will always have a nice rally before maybe they come down lower, or if we're in the other direction. Obviously, it goes both ways. If we're going upside, markets come back down and eventually lift up. If we're going downside, markets will also rally up and then continue downside. So for right now, the big picture on the ES is still bearish. And if rally comes, we close out some open gaps upside. And hey, you know what? We have plenty of open gaps. There they are to the upside here on the ES. And then what do? You look at your intraday pick. You can trade both directions, or you keep the higher probability trade. The higher probability trade on the ES would be as soon as I have some of my swing positions in the green. That's the chart in the upper left-hand corner, the 4-hour chart in the lower left-hand corner. If these are in the green, all right, if these are in the green, then I find support down here. The resistance held, and now it's pushing back upside, and I'll go to my intraday chart, and any trade that I have all in the green has a higher probability of moving in that direction. But that doesn't mean you can never take the short as well. And ticks are ticks at the end of the day. Let's wrap it up with crude, as I think we know the picture on crude is we're still all, that's right, we're all still downside. Bearish, bearish, bearish all around. I haven't seen any green except for a couple this week. And looking at a Fibonacci extension as the crude continues to move downside. Actually, I need to do a slight adjustment here as I see that is not the low. There's your low. And look at where we hit. 261.8. Now, on a Fibonacci extension, 261.8 is a fair full move. Doesn't mean it can't come down lower, but 29 bucks here, or $29, excuse me, is a full Fibonacci extension. Now, we'll obviously take a look at this next week, see if it continues downside. We do have another Fibonacci extension level down at 400% plus, and if that's the final move, that will be the final move. But until then, crude continues to leave. We looked at open gaps upside. We have open points of control, but here we have simply just even open price gaps here, where price action just opened up the next day way down, never even came back up and tapped, and has driven itself. So the key picture here, guys, is we have reached a full Fibonacci target here, 261.8, which is quite impressive, and that in my standards of setting up a Fibonacci extension would be a full move, even though I have another level to the downside. All right, well, that pretty much concludes this week's insight, last week's recap to state of the indices. Please check out jasonkelly.com if you're interested in his newsletter. Makes some great insight into the overall market, has a great long-term strategy, and obviously more of a value investor, finding opportunities downside as eventually the markets will roll up. So check it out, jasonkelly.com. As far as my intraday setups, please make sure you check out either my stock Twitch page or Twitter. Here you can see a lot of the setups that I go through, and each morning I start the day out. Let me scroll down here. Let me show you here. Again, a lot of posts from the previous session. Let me see where we go. Keep going, keep going. There it is. So every day starting out a technical bias to the market. With a indicator of where price action is as soon as the market opens. Again, not an indicator necessarily of where price action is headed, but you can see I like to indicate if we've closed out any open gaps. Major open gaps are usually those holes in the market, and open gaps are any of those lines, and we just almost closed that 15,726 this week. But again, you can see the overall picture here on the market, bearish, 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 and the 51.44 in the morning, good indicator. I've written about this every day. A good, very good indicator of price action during the trading day. The technical bias on the 51.44. The 50, there you can see a nice picture of 51.44 just holding inside, even though the technical bias is downside. So no real moves there until price action continues out of that range and continues in trend. And again, I speak about this every day. Check out my posts here on Stock Twits. All right, looking for the coming week, econ calendar. Very light trading here on Monday with MLK Day here. So markets will close a little bit early. Nothing key this week other than a couple of red stars, jobless claims, Philly Fed, and the existing home sales. And then next week, heading into next week, we're already back into the FOMC. So a lot of jittery trading might be coming on. All right, last article I mentioned here again, stock market open gaps get filled. There was my article just recently posted on here on January 12th in response to the downside open gaps written there on November 2nd. So there we are, open gaps once again upside. Are we going to fill them? Yes, we'll fill them. When will we fill them? I can't tell you when, but I can tell you, hey, as soon as that, remember, go back to the big picture here. As soon as the price action, as soon as these start turning green, on my swing position charts, my intraday charts will allow me entries upside, and eventually dailies and weekly. Daily obviously will change a lot quicker. The weekly will, the weekly and monthly really are big picture bullish versus bearish market. But it's these three charts that will indicate the run upside that we're going to go close out these open gaps, whether it's crude, ES, NQ, YM, etc. So again, there's my article here at See It Market. You can find a link there on my website as well, tradingfibs.com. But stock market open gaps get filled. Now what? Exactly that. I have no clue. I can only tell you that if we turn upside, we'll go get those. If we can continue downside, we got some wonderful fib lines that we might just go tap, close out, and move back up. So anyway, that like I said, concludes this week's wrap up. Feel free to stop by at any of my social media outlets or at tradingfibs.com. My trading mantra: one simple strategy, any market, any chart, any time frame will keep you disciplined. You can find me every day on Twitter at tradingfibs. As always, I really do leave the crystal ball to the experts. I only trade what's in front of me and on my charts. That's about the best wisdom I'll ever give you. Trade what's in front of you and on your charts. Have yourselves a good day, a good evening, good trading this week, and have yourself a blue zone day.